This is Zeb Lowe filling in for President Diego Sanchez. Today, I'm speaking with Josip Rupena. Josip is the founder and CEO of Milo, a Miami-based fintech that is pioneering crypto-backed home financing. In our conversation, we talk about how crypto assets are reshaping mortgage eligibility, what he's seeing from lenders and regulators, where the market is headed as we look towards 2026, and my $5 million silkscreen purchase disaster. Joseph, thank you for joining us.
It's great to be here. Thanks for having me on.
Yes, sir. This is a repeat appearance for you. Actually, I believe you were here in 2022 when our CEO, Clayton Collins, was hosting this show. And back then, things were quite different. But I think kind of rolling into this conversation, there are a few similarities in regards to the crypto market, specifically mainly the volatility or relative volatility that the crypto market is continuing to experience. But before we jump into that, can you share a bit about yourself for any new listeners that we may have and unpack some of the biggest milestones on your journey into the crypto financing space? I know that some of that is tied into the foreign national financing space as well. So can you just kind of hit the high notes on all of that?
Yeah, absolutely. Yeah, so I started Milo in 2019. We're venture backed, so we've raised $24 million in capital from a lot of great investors that have been supporting our mission. We started out lending and creating a digital mortgage offering for international clients that were buying real estate in the U.S. And then through that journey in 2021, primarily because of my interest and passion for Bitcoin and everything in the crypto ecosystem, saw a need primarily that people were taking out crypto loans to go out and buy property with that. And I felt that there needed to be a better offering. A 1-year crypto loan is not necessarily ideal when you're buying a long-term asset like real estate, that requires more duration. So we felt that we needed to build something that was more in line with what a mortgage would be, which would be 30 years. And then we created the first crypto mortgage offering in 2022, did the first transaction in April, and spent a lot of money on legal fees and trying to figure out what was the best way of doing this and what would that product look like. And fast forward to today, Milo is the leading crypto mortgage provider in the country. We've done about $100 million of transactions, and that number continues to grow and to accelerate.
When did you get into Bitcoin?
Yeah, so I got into the space. The first time I discovered Bitcoin was 2011. Unfortunately,
so you're one of the old school. I mean, I know like the retail trader and the cryptocurrency, the slang, the language, like an old school diamond hands hodler.
Yeah,
type.
Yeah, I would say that I really got into the space in 2016. I think that 2011, it was very difficult. Right, it was earlier days. It was very difficult to buy anything, to really understand what was going on, and it felt very much like the element of like collecting trading cards, and you'd have to go into a forum and you'd have to find someone that had some Bitcoin and be able to do that, or you had to mine it. And at that time, I had another company that I was running, so I didn't really have the time to be able to really dive in. And that didn't really come into 2016. And then I had front row seat at what was happening with ICOs and some of the new ideas that were popping up in the space, and really sort of evolving to eventually saying, we believe, meaning we as me, I believe that people that amass Bitcoin wealth, at some point in time, they're going to have to do something with it. They're going to have to decide whether they sell it and then they buy their everyday needs, like a home, or they're going to have to find companies that do offer those services and do it in a creative way where they can solve for that. So we wanted to be on the second and be able to create some of those solutions.
That was I haven't really talked about it much, but that's one of the biggest. You hear those. They sound like horror stories to me when someone talks about like ordering a $5 million pizza. Back in the day, I lived overseas. I was in Southeast Asia for several years, and I came back here in the early 2010s. And when I came back, there was some artwork. There was some silk screen printings of like Hanuman and like these Thai and Southeast Asian mythological figures that I was able to get some. I wanted to get more, and where I lived in Southeast Texas, you couldn't do a regular online transaction. The Western Union thing took too long, and that was troublesome. So I actually got Bitcoin way back in the day and depleted like an idiot. I did it just for just for the utility of it,
Yep.
depleted my wallet, and then and then I blink 15 years later, and it keeps me up at night. The amount of money, amount of money that I paid now for
I think
those
your story is more
silkscreen
common,
paintings.
right? I think there's people that bought a little bit, and that's turned into, if they would have kept it, right, that would be a lot of money today, right? And I think that people think Bitcoin has gotten more valuable. The reality is that today we just spend more dollars for the same amount of Bitcoin. Right.
Yeah.
So Bitcoin's 21 million, right? It's only going to be 21 million. There's not going to be any more. Now it is divisible into smaller amounts, but you're going to be you just have to pay more for today, Bitcoin being right, 89, 90,000 per Bitcoin, right? That's the same Bitcoin that when we started doing our crypto mortgages was worth 40,000, right? And when we did a lot of transactions at 20,000. So for a lot of those individuals today, if we go back and we look at, 2022, how much was that Bitcoin worth relative to how much it's worth today, and it's continued to appreciate. And I think that that's primarily what we're so excited about, is that a product like ours is going to help people continue to build more wealth, and it's something that we track. We want to see people build wealth through these offerings, but that element of being able to hold is it's very difficult. There's so many people that I run into all the time that say, I had 10 Bitcoin, right? I paid nothing for it, and then today.
A millionaire.
Yeah, they'd have a lot of it, right? So that's why I relate to all of our clients as being courageous. The fact that they were able to hold through this period of time.
Yeah, I know that's all. That is a movement, right? It's a philosophical movement amongst lots of the Bitcoin adopters, where they say they're holding the line. It's a revolutionary way of financing and communicating and sharing energy. It goes for much deeper than just finance, for sure.
Yeah, and I think that's the part where a lot of, if you think about traditional finance, I think that's the part that they're still getting their head around of how much this is part of people's identity, and the fact that they believe that this is going to be worth so much more. And when you tell someone, well, why don't you just buy a piece of property and sell your Bitcoin for it after they've been holding it for 10 years? I think that's a part where people, I think, need to understand that is maybe one of the most offensive things that you could tell them to do, is to give up their beliefs and how they decide to hold their wealth.
Yeah. Yes. So whenever you spoke to Clayton back in 2022, it was Bitcoin it was close to 50,000 that year. It had gotten around $48,000, and then it closed the year around $16,000. And this year we've seen Bitcoin's doubled that. It got up into the low 100,000s, fell down to the, I would say, high to mid 70s.
Yeah.
And it looks like now we're going to close out the year right at the $90,000. It's like at 89,900 something this morning, I believe.
Yeah.
So where you look at, when you look at you and where Milo is now as a company closing out 2025, opposed to where you were in 2022, how much has changed in your space and with your company?
Yeah. I think for us, we always thought about, the value of the Bitcoin and how we think about the business. If Bitcoin's worth more, or the value is worth more, then there will be people that have a greater amount of wealth that could potentially use our offerings. So from where we started, right, people are 5 times as wealthy as they were back then, which generally is a good thing, given that the structure of our offering requires them to post Bitcoin with one of our qualified custodians, Coinbase or BitGo. So we view that as long-term bullish for the business. I think from a perspective of saying, Milo as a company and the decisions that we make means that we need to be around for a very long period of time because of that factor, that we are lending to individuals, but they're also posting their Bitcoin with us. So we have to do things in a certain way. We have to do things, maybe not the typical adage of, move fast and break things, right? For us, right, there's a zero tolerance to breaking things because we need to be around for a long time. So we've always thought about risk, right? And saying, well, what's the worst thing that can happen? And in our case, just to give you a little bit of an overview of how we set up our product, we want to help people not sell their Bitcoin. And, on an example of, let's say, $1 million home that they want to buy, they're going to post $1 million of Bitcoin with us. We're going to finance 100% of it, so they don't actually have to put a down payment, which is very significant because in that case, they don't sell any Bitcoin. They continue to own the Bitcoin. If the Bitcoin's worth more in the future, they'll benefit from that as well as owning the home today. However, if the value of the Bitcoin does decline, 65%, they would have to post some more Bitcoin. They could reduce the loan balance, or they could do nothing, and we would just reduce the loan balance for them. That aspect hasn't really changed, right? So when we started lending, Bitcoin was 40, got down to 15. No one had to post any more collateral because of that significant amount that the collateral could drop. Now, Bitcoin.
Let me ask you this: is there a threshold in which someone? I mean, what's the tolerance before someone would have to?
Yeah, so it's a 65%
bring in some more capital,
right?
Okay.
So that million would turn into 350, and then they would have to post more. Which is much wider than and lower, right, than if you were taking out a crypto loan, where that number might be 25% drawdowns. Mm-hmm. So that gives them more time and more room. Ultimately, most of the people that we're lending to, in fact, all of the people that we're lending to, this is not the only amount of Bitcoin they have, right? They have more Bitcoin additional to it. But that element of having this clarity of exactly what happens and what are the possible scenarios and how we've set it up, has meant that we've been able to survive some of these periods of volatility. And I think in the future, if there are more periods of volatility, which I expect there to be, we'll be able to manage that appropriately and give our clients plenty of time to make the right decision for them and their families if something like that were to happen. Because it's not our goal, given that we set up the company to help them keep their Bitcoin, to do things that would put them in a position to have to liquidate their Bitcoin, right, and get rid of their Bitcoin.
Right. Yeah. So going back to the Bitcoin adopters, that's kind of an interesting space as well, because you see people, like I said, they're holding on for the rest of their life, right? And so they actively, it's relative, I guess, whenever to when you get into the crypto market or get into Bitcoin, like whenever it dives down to, like earlier this year, whenever it dove down, in the 70s, people were. The ones that are bought in the most were overjoyed because this is an excuse for them to be able to buy more, because they see that value really projected out over decades, right? Which is just not that's just not a normal attitude of someone investing in value, right? In any store of value.
Yeah, I think that I find myself in that camp, right? I've never sold anything, and I don't anticipate that I'd probably sell any in my lifetime, right? Hopefully, my kids pass it on to I'll pass it on to my kids, and they'll pass it on to their kids, because I think that when you have something that is a finite, scarce asset like Bitcoin, I think there's a lot of value, and I think that element is a very big component to it, and I think it's an emotional aspect, right? Of the wealth that's been created. If you think about how it's transformed hundreds of thousands of people's lives. If you think about the appreciation of Bitcoin relative to anything else they could have bought over the last 15 years, right? It doesn't even compare. So if you think about it, you say this is the most valuable asset that you could possibly buy in your lifetime, you want to try to keep it, because as long as that hasn't changed, you're going to continue to hold it. And I think that there's a lot of things where now we've been seeing in the last year that Bitcoin has become much more mainstream. It's becoming much more institutionalized. It's always been global, but now it's a different type of global player that's acquiring Bitcoin. And it definitely feels like there's not going to be enough Bitcoin for everyone. And in that situation, this is going to be a lot more valuable in the future.
Right. Well, this would be a really good point to kind of further clarify, because whenever you're talking about crypto, you're talking about Bitcoin primarily, but there are other players in the space. Primarily, Ethereum and XRP are the big three. And the clients that you're working with, are they a Bitcoin exclusive, or maybe I should say, does Milo work exclusively with Bitcoin, or will you also work with some of the other key players in the crypto world, but not just the golden standard of Bitcoin?
Yeah, we'll lend against Bitcoin and Ethereum. We've got requests for other assets, right? You mentioned Ripple and Solana and others, right, that are out there. I think every one of those has its unique ecosystem. And thinking about the people that bought into it, the people that hold it, why they hold it, what they decide to do with it. And in some of those other ecosystems, there's a different structural aspect to, right? Whether they're proof of work or proof of stake, which means there might be natural decentralized lending markets for some of those ecosystems. And then if you think about Bitcoin, one of the reasons why the majority of the transactions we've done in Bitcoin is that it doesn't have those aspects. So it does require you to potentially face an institution if you want to borrow against it, like ours. So that's an example, right, of how you access credit. So Bitcoin for us is unique. Bitcoin's also the largest. It's the people that basically are in a situation like I am, that I want to hold this asset for a very, very, very long time. And then that changes the perspective, right? We're not thinking about this as trading, speculative. If it goes up, I'm going to sell. If it goes down, I'm going to try to buy more. Right? We're much more in the buy and hold mentality. It doesn't mean that the people that are trading don't exist in Bitcoin. They absolutely do. It just happens the people that we want to particularly work with are the people that believe that they want to hold this asset for a long time.
So what do you think, going into 2026, what's the most exciting or out of left field trend that you see shaping crypto assets for home financing?
Yeah, I think it's the aspect of capital markets, right? So if you think about like our limitation in 22 wasn't that we didn't have individuals that wanted to buy homes, right? I think a lot of people wanted to buy homes. We've had over 10,000 people reach out to us, and we've had lots and lots of conversations with thousands of individuals around being able to buy a home with Bitcoin. And in that case, there hasn't been a shortage of that. What there's been a shortage of is the right type of capital to be able to do this. And the conversations that I was having with capital partners in 22, it was very hard to talk to them about structurally, what does a crypto mortgage look like? What are the benefits? Why does a consumer want this? Why does this make sense from a capital markets perspective? And we found that people couldn't get past the idea of just the first question, which is, what is Bitcoin? So I think we've evolved from that perspective. And then now you're starting to see the ability for potentially banks to come into the space. I think that the element of having a unique product and a unique value proposition and having built brand and trust and credibility matters a lot. So I do think that what's exciting is that, you will start to see banks potentially come into the space. The question is, how do they do that? Do they do it through a company like ours, providing us capital so that we can scale and grow and offer this? Or do they decide to lend directly? I think that this year has been a year of education and spending a lot of time with different institutions and getting them comfortable with it. I think next year is probably going to be the year of more adoption and more implementation, where I think a lot of people this year really were focusing on stable coins on the back of the Genius Act. And I think next year, I think people will start to look at this and say, okay, how many consumers are there? Is this someone that we want to work with? Is there enough stability and clarity around it, which I think there is? And is this going to be around? And the answer, I think, is yes. So I'm excited about all of those things coming into play next year.
So is there a standardized method or practice for evaluating crypto assets for mortgage eligibility?
So I think we're creating that, right? I think we are looking at it, right? So I think that, when you think about, I mentioned, what does Milo do, right? We help people not sell their Bitcoin. And the reality is that we're trying to solve customers with three distinct problems, and some of them or challenges, and some of them have all three, right? So one of them is we know our clients don't want to sell their Bitcoin, right? Selling your Bitcoin triggers capital gains, tax consequences, the element that they believe Bitcoin is going to be worth more, so it's going to continue to appreciate. So the moment you sell it, right, you don't have that. And the third is the qualifying aspect, right? So for us, what we realize is that there's a lot of individuals out there that have Bitcoin, but because it's the majority of their net worth, they may not have traditional income, W-2 income and things like that are essential for conventional mortgage underwriting. So we had to qualify them on the basis that they do have Bitcoin and come up with a way of underwriting them alternatively. So for a lot of our clients, right, we've done that for them and really given them the ability to potentially mitigate against all three and qualify. I think that there are more people that are thinking about this in different ways. I think that there are certain ways of underwriting that I think will start to widen the qualification aspect, but you're still going to find yourself in a situation where if you're going to ask a client to put a down payment, they're going to have to sell their Bitcoin. And I think that for a lot of people, I think is what's kept them on the sidelines all of these years, primarily because if you would have sold your Bitcoin 4 years ago, that home that you bought might be worth $1 million, and today it might be worth 1.5. But if you would have kept your Bitcoin, that would be worth $5 million.
Right.
So
right.
I think that you don't really change that aspect. And we've built some really, really good tools to show what this looks like from a comparison perspective. And if you go back over the last 15 years, given that Bitcoin's appreciated over that time, it never would have made sense for you to sell your Bitcoin to either put a down payment or to buy a home. So
how do you, let me ask you this, excuse my lack of vocabulary, because this is not totally the sandbox that I play in. But I was talking to an LO the other day, and he did his first asset depletion or crypto asset depletion loan, right? And if I recall, his customer, they had Bitcoin, and they had to transfer X amount to a wallet on Coinbase that was then verified. That amount was then verified, and then they proceeded. But do you care whether or not that crypto is in cold storage somewhere, and then is verified that way? Must it be moved to an exchange? What can you walk me through that process and help me understand that better?
Yeah. So for us, again, we've spoken to a lot of clients, right? Our clients have it in cold storage. They have it at Coinbase. They have it on other exchanges. They have it in different locations. So depending on the type of loan and, how much they have, we're going to verify that, right? Every amount of Bitcoin that comes through us is going to get verified on chain. We're going to look at the history of it. We're going to make sure that it looks good and everything makes sense, right? We have those tools in place, whereas other maybe LOs that are not dealing with these customers all the time, right? They may not have those tools. They may have to rely on third-party sources to be able to do that. But primarily, they're underwriting it like a regular mortgage and looking at it as an asset and then being able to underwrite that. In that situation, they're probably going to have significantly more times of the Bitcoin because you are depleting it like a traditional asset depletion loan, right? What's unique with us is that, that $1 million home will require $1 million of Bitcoin. So we're going to require a lot less Bitcoin than you would in a traditional mortgage sense because we are considering the Bitcoin for the underwrite aspect. It is something that we did look at. I think it is something that more people are looking at doing. But again, I think you still maybe don't solve all of the elements, which is, how do I come up with that down payment? How much Bitcoin do I need to have? If I need to have 4 or 5 times the amount of Bitcoin, how many people actually have that relative to the home price, right? So I think that it is a solution for some people, just like there's a lot of people that have Bitcoin that can qualify conventionally, right? They have been buying homes. It just depends who your consumer is. And I think that that's probably the biggest thing that we realize as a company is that just because someone says they have Bitcoin, it doesn't mean that every single offering is going to work for them, right? There's going to be a lot of different types of offerings. There's going to be different ways that people attack these needs for individuals. And it just so happens that I think the customers that we work with, right, fit the profile that we want, and other people will find other things that are like asset depletion, and it may work for some, right?
Mm-hmm. Right. Well, how are you finding you mentioned the Genius Act, and obviously bureaucracy is very slow to adopt any sort of change or look down the road. How do you feel the regulators are responding to this intersection of crypto and mortgage? And what frameworks do you think we should continue to expect within, or any new frameworks within in 2026?
Yeah. I think that they're learning, right? I think that now, right, the first part is saying, okay, if we can't do this, should we spend any time on it? And I think that that's where we were last year. I think this year, you're starting to see that push, right? I think the first big moment was, through this first part of the summer, right, when Pulte came out and said, Fannie and Freddie and the agencies, right, they need to be looking at this. We need to look at, how do we qualify people? And I think that really started to get people to really think about the space. Naturally, right, a company like Milo that's been thinking about this for 3 years before, right, that was very exciting for us to say, okay, there are more people that are going to be thinking about this, and there might be new ideas that bubble up, right, and that people can implement. So I think that was a big first move. Now I think that there needs to be, in my perspective, for a lot of these ideas and things that are going to get proposed, I think we need to think about, can we create a sandbox? Can we create a safe space? Because mortgages is very, very regulated, right? Between RESPA, TILA, and everything that came out post Dodd-Frank, it limits a lot of this innovation. So in order for people to find out, are there really consumers that need this? How do we think about affordability? I think lenders need to have a safe space, right, to be able to do that. Not to say that they're going to cut corners, but just the ability to find out, are there consumers and are there different ways of thinking about underwriting and qualifying? And then does it materially change things? I think that when you look at secured lending like mortgage, where you have default rates that are under 1% across most categories, with really principal being recovered most of the time, right, where losses are almost non-existent, right, as long as people are putting a down payment, right, and doing things in a certain way. The lending that happens today in mortgage is very different than the lending that happened in 2007, right, and 6, right. It's entirely structurally different. So everybody's very scared to go back to that, but we're nowhere near that. So I think that mortgage, which is very secure, I think we could do a lot to basically push this and think about innovation. But it's only going to happen if lenders feel like they have a safe space to create that innovation.
Okay, so on that, what misconceptions or myths do you run into about crypto and the mortgage industry that you really wish you could take a few minutes to clear up?
Yeah, I think volatility, right? I mean, I think people think about volatility as a bad thing, right? And that it's a bad word, and that it's not a good thing, right? I think the reason why Bitcoin has appreciated is because of volatility, right? It's gone up, it's appreciated over time, and it cuts both ways. So then it really comes down to how you build your products and how do you mitigate around that volatility. And that really becomes who's designing these programs. But Bitcoin as itself, right? I think the volatility is a good thing, right? If you think about it in the concept of our product, right? We've created a dual collateralized mortgage, right? We have the safety and price stability of real estate as collateral, and then we also have the benefit of Bitcoin, right? Where it is 24/7 tradable at all points in time, incredibly deep liquidity, where you could basically liquidate Bitcoin if you had to at any point in time. Now, real estate has deficiencies, right? It is not liquid, right? It's the opposite, right? So if you think about what we've created is that we've taken the best of both properties and put them into one product, and now you actually have a very different risk profile, right, from that asset. So I think that aspect of saying, well, volatility is a bad thing is probably the biggest misconception, that you can take that volatility and turn it into something that is very positive in structuring a product.
Right. And also there's just like the micro versus the macro view as well. I told you like half-heartedly as a joke. I mean, it was a real story about me getting into Bitcoin very, very early and then just being an idiot about it and, not replenishing my wallet and walking away from it 10, 12 years later. So I re-entered, unfortunately, much later than I wanted to, but the community, like we talked about as well, is just an interesting community to follow, kind of be a fly on the wall. And every time that a naysayer, a crypto or specifically a Bitcoin naysayer, will start looking at the volatility and the price drops, and it's always like the first or second comment is just zoom out.
Yeah, yeah, absolutely.
Just zoom out.
Absolutely. I mean, you could go back and you could say, okay, well, you look at one of the best performing stocks, right, over that same period of time, which was NVIDIA, right? And if you look at it and you say, okay, well, NVIDIA didn't go up and to the right the whole time, right? It had lots of volatility. It had lots of periods of drawdown, and those drawdowns present opportunities for people to buy at lower prices, right? So like right now, right, Bitcoin is sold off. Given where we felt we were in April and May this year, I don't think any of us would have thought that we might be able to pick up more Bitcoin somewhere in the 80s, right? 80,000 range, right? 85,000 range, right? That looked like that wasn't going to happen because everybody was talking about 250, 500K Bitcoin, $1 million Bitcoin. So in a way, right, that volatility is actually going to give me an opportunity and many other people to buy more Bitcoin, right, at these levels. And that's what's going to allow us to hopefully build more wealth for our families. So you just have to look at the volatility, right? I'm not planning on selling. I don't have a sell price, but I do have a buy price. And as it goes down, right, I can buy, right? So I think these are the things where, people analyze the Bitcoin market, or they don't know enough about it, and they say certain things because that's what's been potentially mentioned to them, or there was some so-called expert, right, that said that. But I think that most people, if they do spend time talking to people that have Bitcoin, I think they'll be very, very impressed with the quality of people that are in the space and why they own Bitcoin and the rationale. And I think that time and that education, I think, is what allows you to build conviction that this is a very good asset to hold for the long run.
Okay, so let's spend a little time on that type of person, those people in the community. The last time that you spoke with Clayton, you referenced the people that you were working with at the time. It was back in 2022. They weren't people that were just now getting into Bitcoin. They had gotten into Bitcoin, I don't know, 8 or 10 years prior, really built up their wealth by holding, again, at that lower price point. Now, a couple of years later, and as we've seen Bitcoin continue to continue to rise, the customers that you're working with now, are they still people that entered the market super, super early? There's been, just even through altcoins, right? There's been a lot of people that made over the past couple of years made millions of dollars, hundreds of thousands of dollars off of altcoins, and then sold off and transferred all that to Bitcoin, and are now holding, quite a large bag of Bitcoin. So, are you starting to see more clients that entered into the market over the last 5-6 years, or that made their money in altcoins and then transferred that over?
I think that remains consistent, right? I think a lot of our clients bought Bitcoin 10 years ago, right? They bought $10,000 of Bitcoin, and that today is worth somewhere between, $3 to $7, $8 million, right? Depending on how much they bought, how much they kept, right? All of that. So I would say that those are the individuals that we tend to work with. However, we have started to see that more people recently that didn't buy Bitcoin early have been getting their exposure to Bitcoin and buying larger amounts of Bitcoin, primarily through the ETFs, and spending some time there, and buying IBIT and allocating more of their portfolio. And the ones that started buying that last year, right, that's appreciated nicely for them, which has helped them to build conviction to allocate more of their net worth. So I think this next phase of people that are going to be buying Bitcoin primarily because of what is now a push by more of the private banking space, where I was at Morgan Stanley and Goldman Sachs previously. At those banks, right, they finally came around and saying, individuals need to allocate 1 to 4% of their portfolios into Bitcoin. So I think, that is something that we're keeping an eye on, that you're starting to see more people that are allocating to it. And if, we do get to these numbers where Bitcoin is 250, 500, a million or more, you're going to find that those people that basically bought that, right, they're going to have a lot, and they're not buying $50,000 of Bitcoin, right? Some of these individuals are buying $250,000, $500,000. So that might be worth, $5, $10, $15 million down the road, even though for a lot of people feel that they got in very late. It doesn't feel like it's late, right? If you believe that you can still make, 5, 10, 15, 20x, right, over the next 10 years and anything, right? I would challenge anyone to find something like that with the level of conviction and, the facts of Bitcoin to allocate, which is, again, why I think we're seeing people allocating larger amounts for initial buys than maybe some of the individuals that bought $10,000 of Bitcoin 10 years ago. So maybe there's even greater conviction today, right, by some of these individuals.
Right. Let's get some advice for at two levels, for both the lender and for the home buyer, or perhaps for an LO talking to a home buyer. If you had to advise a traditional lender that's just beginning to consider this space and add this to their, let's say to their product portfolio, what steps should they take to prepare both internally and with their outside partnerships?
For people that are getting into Bitcoin, I always advise them to just buy a little bit of Bitcoin, buy a very small amount of Bitcoin, right? Something, again, it doesn't have to be tens of thousands of dollars, right? Buy $100 of Bitcoin. The reason why I think that's important is because as you buy Bitcoin, you start to track it, you start to watch it, you start to psychologically think about it, right? Even if it's a small amount, but now it's a line item, right, that you're thinking about. That helps you to get educated, because then you start to spend more time, you start to listen to things on X and Spaces, and you join different communities that have it. And then now you start to get familiar with it. So now you start to understand who is the consumer that you potentially might be working with, and understand what are their sensitivities, because now you become one of them, even if it's not a lot. So I think that part's very, very important. And I've seen that with my team, people that came from traditional banking, and then they got a little bit of exposure, and then they spent more time and more time and more time. And then, that's how you build up conviction. So I think it's very important that you think about this consumer set in that way, and learn about them, right? And learn what they want. Then you can give them the proper advice. And sometimes, we find ourselves that, the individual doesn't need a crypto mortgage, right? They have plenty of other assets that this isn't the best solution for them. And that we're not necessarily trying to push something on them, right? We're just trying to help customers. So I think that first part of understanding who the customer is really important. And the second part, right, is trying to figure out what are the offerings that are out there, right? What is a crypto loan? What is a crypto mortgage? What are some of these other things that are coming along, right? And really getting familiar with the product set, and then understanding why would a consumer choose one over the other? And then what are the things that are important, right? In our case, like, we understand that trust and credibility and brand is incredibly important, because people are posting, this collateral, which is Bitcoin, that they haven't moved maybe ever to us. They have to really trust the company. So understanding that, whereas maybe traditionally an LO is just thinking about pushing a product and then eventually someone else is going to own it, someone else is going to have it. But they're really trusting paper. They're not really having to post a lot of, they're not posting their capital, right? This is not a collateralized loan from that sense. So, understanding these nuances, I think, is really, really important. And I think that's going to allow them to be able to give good advice and get the customers into the right product.
Well, how do you think the traditional process and from the referral process and the conversations is, mainly, a realtor, generally speaking, big picture, a realtor is going to refer a customer to an LO, then they'll have that initial conversation and learn a little bit about them. And then, it's either what you're eligible for, or if you've got great credit, good DTI, then these are the products that are most beneficial for you. And then you kind of go from there. Right. Do you foresee in the near future that just, the crypto conversation or the Bitcoin conversation, the wallet situation or conversation just being integrated into that initial conversation that you have with clients through a traditional, referral process? Like right now, are you seeing with your clients, or does it seem that clients are coming to you or from your contacts in the industry, are clients coming to lenders saying like, hey, I want to do this, as opposed to lenders advising clients, hey, you should consider this? Does that make sense?
Yeah, it does. I think that's a great question, right? Because it's one that we ask ourselves all the time, right? So if we say, okay, well, are there LOs out there, right? Are you asking the question, right? Which is where we started, right? The reason why we found out that there was a need for this is because we started asking our clients, do you have Bitcoin? Do you have other assets, right? What does this look like? And again, 3 years ago, the answer was, why, right? I've been turned down. I can't qualify. I actually don't tell people that I have this. Whereas today, right, if the conversation is different, and I think the world is in a different place where now people can look at it and say, no, this actually is an asset. I do want to disclose this. I do want to tell you about it if it's going to get me qualified or if it's going to give me better terms. So I think that's probably the first movement, right, is for the LO to be able to ask those questions and then decide, does that make sense? I think what's unique about Milo is because we really have the benefit of being the first mover, right? There's a lot of things there's a lot of data, there's a lot of articles, there's a lot of great podcasts like this one that are out there where people can follow our story and our track record and be able to sort of think about how we've operated as a company. Whereas for an LO that's just getting into the space, they may not have that. But asking those questions, right? Getting educated, understanding all those parts, I think that's what's going to distinguish whether that client is going to want to tell them about their Bitcoin or not. Because, if you ask someone and say, here, well, you haven't really talked about this asset, right? You're not going to necessarily go to every client and say, do you have Bitcoin, right? Do you have this? Like, how do you do it in a way, right? It's a little bit of like, even if you're a financial advisor, you meet someone and you're not going to ask them right away, here, tell me all your assets, tell me everything that you have, right? So
right.
I think it's kind of,
if they're wearing a Robert Breedlove t-shirt or their avatar is the little like electric LOIs or something, probably probably a green light.
Yeah,
right?
maybe. Yeah, exactly. Yeah. But I mean, like we're not all like tattooed with like, Bitcoin on our heads, right?
Sure.
So it's one of those things where I think it should be I think it happens already, where people and LOs and good LOs try to understand who their customers are, try to understand what their situation is, right? They have good ways of asking questions and getting comfortable with them and doing their process, right? To see what is the right fit. But I think that we're definitely in a world where I think those conversations should be part of the process.
So what's a common mistake that you see buyers and lenders make when it comes to either evaluating crypto, having that conversation, and how would you recommend that they avoid it?
To avoid the conversation, or to have it
the mistake. What's the biggest mistake that you see both home buyers and or lenders making? Is it not having that conversation?
I think so. I think it's not having the conversation. I think it's the assumption that and I think that's changing, right? The assumption that it doesn't matter in the process, meaning it's not going to qualify them, it's not going to help them. I think that part of saying, no, this could actually help. So I should try to find out, the companies that are offering these programs, and then try to get educated from that side. But I think we're going to enter a world where this will help some customers that may not qualify. Mm-hmm. And I think that might be the difference. Now the question is, do they have a program? Do they have something that can fit that has some crypto aspect to it where they can offer it? Or does that client just end up going somewhere else, right? And working with someone that does offer it.
What about the disruptors like fintech, founders and innovators that are looking to, make waves in this space, in this intersection of technology and digital assets and mortgages and real estates? If they're looking to enter into these waters, what skills or qualities do you think are essential for them to be successful beyond? But obviously, you need to have some Bitcoin, or you have to own some crypto just to kind of know that world a little bit. But beyond that, what else would you recommend?
Yeah, I think that in a category like mortgage, right, it's very complicated because there's a lot of pieces, right? There is the technical piece to build great technology and user experience. There is the aspect of capital markets, right? How do you finance yourself? And then there's the regulatory compliance and legal, right? That's a big piece of it. I think that people that are looking at the space, right, they say, well, it's very easy. I'm just going to do mortgages. I'm just going to give money to people. Well, it's not until you start to figure out all the different pieces that go into that you realize how complicated it truly is. And then the assumption that, sometimes to build some of these great companies, it actually takes much longer too, to be able to do that. So I think that for a lot of people, it's like focusing on the areas where they think they may have an expertise or a unique insight, building there. And then, as time evolves, right, you continue to take on more of the overall process, because it's very easy to just say, I'm just going to do this. And, I think we were naive like that, right? And we said, here, we're going to lend to international clients, and we're going to build technology, and we're going to do this in 24 hours, and this is going to be the best experience. And then we realized that there was all these other components that we didn't really understand that well, and had to get versed in them. And I think that meant that we just had to have this element of persevering and trying new things and being okay with being wrong, but then continuing to try one more thing. And I think that, we're finally at that point where I think that one more thing has led into something that we've created that is unique, that we've gotten to the point where we are the difference between potentially someone buying a home and not. It's that significant. And I think that part of being able to build something that is not just 3 to 5% better or more efficient, but 3 to 5 times better, or even better, something that couldn't happen unless you existed. So, having a really, really high bar of where you're focusing your energy, that it's a structural seismic change and not just something that's just a little bit better. Because I think you see a lot of that in real estate and fintech. I'm just going to make this a little faster. Well, I'm just going to charge a little less for this, or I'm going to do that. And that's not enough to stand out in the market.
I have one last question for you, and this is a little bit out of left field. I thought about this a while back when I heard the news, and then in my workout this morning, there was a video that popped up on YouTube, and so I'm really stretching the limits of my understanding on this. So again, bear with me if you will. But a lot of the initial concern, and still to this day, between crypto transactions, and it's the security, right? And that but the reality of the situation is that those transactions are in many ways more secure than a traditional financial transaction. But then Google developed or just created a few months back it was later, but this previously over in 2025 at some point earlier this year, supercomputer. Or the quantum computer. So quantum computing, because part of the value prop of Bitcoin is that it's quote unquote unhackable, right? And some of the reports from what quantum computing can do. And when I hear this stuff, like I said, it makes me feel like a child, because I really don't understand it. Even in an abstract way, it's difficult for me to wrap my mind around that power and the problem solving and the computation. I just can't get there. But one of the things that has come out of that over the past 6 months or so is that when quantum computing is released into the world, then, even Bitcoin, which is supposed to be the most secure, the most unhackable thing, right, is done for, right? That can be hacked. Are there any concerns? Because to me, it's like, well, at that point, if anything and everything is hackable, then it's kind of the Wild West. Yeah. Are there concerns in the community or on your side about that? Yeah. Is there kind of like foresight on where that's going to go?
Yeah.
And am I wrong? Am I just totally Am I making an idiot of myself?
No, I think that's a great question. I think it's the most pressing question right now for anything in the crypto ecosystem, primarily because we know quantum computing exists, right? There are these supercomputers. Again, there are very few of them in the world today, but as the technology continues to evolve, right, there will be more powerful computers, and maybe at some point in the future. I think as it relates specifically to Bitcoin, right, from us, it's a very important question because, again, that is our collateral, right, and how we think about that. Now, I think there is a number of misconceptions, though, around it, primarily saying that just because this exists, then instantly everything is going to be hackable and things are going to move. The element of hacking, right? If you think about Bitcoin itself, right, there's going to be 21 million, right? There's been roughly, a little over 19 million, right, that have been mined. The last one will be mined, well after we are gone from this planet. Is that just because it moves, it loses value. So I think that's the number one misconception, right? If someone can move and hack it, they can move your Bitcoin to somewhere else. Okay, they can move your Bitcoin. It doesn't mean that it's depreciated in value. It just means that it's moved, right, from one wallet to the other. So that's the first misconception. The second misconception is that basically all Bitcoin could be hacked. The reality is that where there's the most vulnerability are older wallets that have not been moved. So that's the second misconception. And that's a very, very small percentage. So again, not all Bitcoin is hacked. The third is there are things that can be done to increase the level of encryption and other elements that could make it, again, very much or near, not impossible, but very, very, very difficult, even for a supercomputer, right, and a quantum computer to be able to do that. So there's a lot of very smart people out there because, again, right, Bitcoin is a $2 trillion asset class where there's a lot of people that are very sensitive. So I think you have some of the smartest people on the planet right now thinking about some of these aspects. And I think things will be released in some period of time. If you told me quantum computing could do this tomorrow, right, I think there would be some difficulties again, but primarily older wallets. But not everybody would be impacted. Majority of people would not be impacted, right, because of that level of encryption that already exists. Now, passing on that aspect, the things that we highlight, right, a lot of the systems that we use for banking and for other elements too run on similar levels of encryption, right? So it really puts us in a situation where essentially all of society and all of the level of encryption would be vulnerable. The question is, what is probably the best place to leverage that vulnerability? It may not be Bitcoin. It might be other places. So
that's what I was going to say. Like if time and money and resources are being spent on using a quantum computer to hack Bitcoin, I mean, why wouldn't those resources and that time be spent hacking or accessing right? Far more accessible
absolutely there's so many more sensitive systems, right, that you would probably extract a greater amount of utility and value from than necessarily Bitcoin. I was at a conference a couple weeks ago, and actually about a month ago in LA, and we were talking a lot about quantum and the impact around it. And I realized, like, if you had the ability to do this, where would you implement this, and where would you spend your time doing this? And if you had it, would you just naturally say, okay, we have this, and then everybody would know and everything would be hacked at once? Or would you do this in a way where you would just siphon off a little bit to some of these dormant wallets, right, that haven't moved, that there's anything there, and if you had the ability to do it, you would just do it, and no one would really notice.
Yeah, that's the old Office Space hack, right?
Yeah, exactly, right. Do it in small amounts. So again, it doesn't feel like it's something that would benefit anyone to say, okay, this is widely. But from our perspective, I think that it's not that it isn't something that could happen. I think it can happen. I think there's just a lot of things that would need to happen for it to be, catastrophic. And I think that we'd be in that situation where I think a lot of other things would also be incredibly vulnerable, and I think that that's why people are taking this threat primarily with the advancement of AI and everything else that's been happening pretty seriously. I would say, right. So I think that we will have solutions and patches and upgrades and things like that, right, to that, and the networks that are more centralized in the crypto space will probably be able to do some of these upgrades sooner on a wider scale, right, like Ethereum or other networks, right, that can fork their network. Whereas something like Bitcoin, where no one controls it and is truly decentralized, that might be a little bit more challenging. So they're going to probably need different types of workarounds, right, to be able to solve for this. But I'm fairly confident that the broader industry is going to be able to figure it out.
Excellent. All right. Well, Joseph, thank you so much for lending us your time. This was a great conversation, very, very interesting, and thank you for teaching me.
Absolutely. Thank you for having me. Enjoyed it very much as well.